Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is FOMC Minutes and the FOMC Minutes release. We're going to cover what exactly the Fed had to say in the last meeting, what you can expect from this release, which is going to drop here in about an hour, and which markets are going to be under fire. Also, we had a big-time economic development, I guess, down in New Zealand. We had an extra large event where they cut interest rates by a surprise half point. I was very, very surprised by that, as were most analysts. The Kiwi has been on the move. A lot of movement in the Kiwi. We're going to start there. We're going to really go through a few of the trade ideas that we've had. We've got to look at metals. Metals have absolutely exploded. And we're going to take a look at that voting mechanism on the Fed, what our interest rate expectations are, and potentially what we could maybe get out of today's FOMC minutes. I'm not necessarily certain what it's going to say. I'm pretty sure that the idea is going to be pass the buck. You're going to hear a lot about the federal government in those FOMC minutes, but those drop here in about an hour. So good to see everybody back in the room. Let's see. T. Marina, good to see you, T. Bible Tales for Kids. Hey, Shane, this is Bobby Bob. Good to see you, Bobby Bob. Welcome. Tuku, always a pleasure, Tuku. Gordon Williams. All right, Gordon Williams, good to see him. We've got sort of an interesting dynamic going here today. A lot of people really love the FOMC minutes. And remember, the FOMC minutes is not an FOMC interest rate announcement. You're not going to get an interest rate decision here out of the United States Federal Reserve or Jay Powell. They're not going to come out. They're not going to talk. They're not going to make any new news. Now, what is going to happen is we're going to read those minutes, and it's a great big press release. It's a long, just a bunch of paragraphs and just a basic report, right? Well, what we're going to be looking for is a couple of different things out of that. Number one is going to be the committee, which is the FOMC. That's sort of short for the FOMC, the Federal Open Market Committee. They call that the committee in the minutes. We're going to see the committee's idea of where the economic development here in the United States is going to go and what they believe the largest risks are to the environment or into the economic environment. Remember, the United States Federal Reserve, as with any central bank, has two things they have to do. They only have two. Now, you and I, we have hundreds of things we have to do on a daily basis. They have two. All right, promote pricing stability and promote maximum employment. Right now, I've heard it said that we're at maximum employment with unemployment right around 4.2%. Okay, that's maybe a little bit high for what we've seen over the last decade, but that's okay. FOMC says, all right, maximum employment, we're acceptable, but is pricing stability where it needs to be? Typically, that's a 2% growth target from the Federal Open Market Committee and the Fed. I personally believe that inflation's outrageous. Unfortunately, I have to go to the grocery store later today, and I'm going to find out just how outrageous it is. Prices are very, very high here, at least in the United States. A little bit better in Eastern Europe when I was over there. That's what I saw, but prices are high, guys, and we've got to see how the Fed addresses these risks. What is going to be the biggest factor that they must address moving forward? That's what the FOMC minutes are all about. It's all about forward guidance and maybe getting a hint or two, maybe a read the room on which way interest rates are going to go. So we're going to get there. We're going to get there in about 5 or 10 minutes. I got to go over some other markets. So we've got to start with the Kiwi because it was an absolutely huge U.S. overnight session for the Kiwi. Nat Niles. Hello, Shane. Good day. I'm doing very well, Nat. Thank you for joining me. Ghost Beard. Good morning. Good morning. Good evening. Good afternoon, wherever you may be. There you are. Let me see. M with a dot. I love it. M. It's like Q from the James Bond movies. Where can I watch the FOMC meeting minutes live? Okay. Here's the thing. You're not going to have a meeting minutes. It's not a live event. It's not like the press conference that we do FOMC live. I do that one live as well. What you're going to get is you're going to get a press release. They're going to release the official documents, the minutes. Remember, the meeting minutes are written prose. It's basically a report of everything and a summation of everything that was said at the last FOMC meeting. So it's not going to be Jerome Powell out here talking. It's going to be a written report. And that's why trading the FOMC minutes can be so difficult. It's very difficult because it takes 10 or 15 minutes for the media to read through this and say, okay, what are we going to highlight here and what's going to be reported? That's why the markets, typically you see them have a delayed reaction. So remember, if you want to trade the FOMC minutes or the FOMC live, be sure to head on over to Switch Markets. Get in on the action. There's zero commission accounts, tight spreads, thousands of markets. They've got bonuses. We have a reverse KYC program going right now, which means that you don't even have to pass KYC. You can start trading immediately with $2,500 as being the top side limit on that. So get on over to Switch. Make sure that you check it out. You can tell them I sent you, but pretty much already know everybody over there, so they already know that I sent you. So just go ahead and get on over there. Take a look at all your different options, all your trading options, and all the things that you can do. Let me see. How do you expect the decision? I think that what you're going to see today, Globa vibe, I think you're going to see a very, very concerned Fed, a very uncertain Fed, and a lot of things are going to just be ambiguous, absolutely ambiguous. Dave, F19, good to see you, Dave. XAU, USD, buy or sell? It's got to be a buy right now. Gold's got to be a buy. We're going to go over that in just a second, guys. Hey, good to see you. Yes, sir. All right, guys, let's go through a few trade ideas here. First one that I want to show you is the New Zealand dollar, Canadian dollar. Now, one of the biggest things we saw during the U.S. overnight session was the big-time move out of the RBNZ, all right? Definitely the news of the day. 2.5% is the new prime rate down in New Zealand. This was a major cut from 3%, a half a point rate cut. We expected only a 25 basis point rate cut, and now the New Zealand dollar is absolutely plummeting. Let's get right out to price action here. This is a good look at the New Zealand dollar, U.S. dollar. All right, this right here, we had a 4-hour. This is our 920 EMA crossover. If you missed the video, head on over to How to Trade Calm on YouTube. Check it out. It'll show you exactly how to trade this strategy, a powerful strategy, especially when you know you're going to have a market driver. Right here, this doji is going to be our coded purple bar. Typically, we have gold for buys. We got purples for sells. And you'll see right here, this doji, you got to blow it way up. But that's where our crossover, our 9 EMA crossed under our 20. There's your sell, and that thing worked like a charm. So interesting trade right there on the Kiwi, the New Zealand dollar, New Zealand dollar, U.S. dollar. Very, very weak Kiwi right now because of those rate cuts. Remember, when central banks cut rates, what happens to the domestic currency? It gets weakened. Why? What is the central banker doing when they cut interest rates? They're putting more money into the system. They are increasing the money supply. Why would you do that? Why would you increase the money supply and devalue your own currency to foster economic growth? Remember, everything has a cost in this world. You have a cost, I have a cost, all these things have a cost. Housing, food, gas, fuel, cars, whatever. They all have a cost. So does money. Money costs something. And when money becomes cheap, it's easier for me to pay for more money so I can go do whatever I want to do with it. Remember, cheap money fosters economic growth. When a central banker cuts interest rates down the way that the RBNZ did, it devalues the domestic currency, it increases the money supply, and therefore is supposed to create economic growth. That's the idea. It's called, essentially, it's quantitative easing. It's designed to stimulate domestic growth. I'm not going to say you're in trouble down under because New Zealand's not down under. This was a dramatic move. The folks are really worried about not necessarily a long-term recession, but a deep, sharp recession. That's the kind of move that we saw today. All right, right here, Kiwi on the 4-hour chart, really crashing. If you wanted to take the sell here, you probably could get away with it. Kiwi CAD. This is sort of the trade idea that I had out a long time ago. This was from a few weeks back, and it's very important that we understand that really the role that our macro levels play when you get into these markets right here. What do you got? We've got a long-term level. This trade idea was put out 16 days ago, and it was money in the bank. I mean, we were looking at 62% down there, right around 80 and a quarter bids. 80 and a quarter bids, absolutely huge. And what happened? 30-minute chart. Take a good look at what happened, guys. There's your decision. Huge volume strings into the market. Absolutely fantastic teachable moment. There's your volume. Volume comes in, compression, and then retracement, and we went right up and got paid off with no problem at all. So this was a beautiful trade. This is one of the reasons why I trade macro support and resistance levels, horizontal support and resistance levels on long time frames, on these short time frames. A monthly retracement level is going to be a very, very strong zone for entry. We called this one pretty well on this Kiwi CAD. A lot of folks are trading this right now. So I'm confident that you guys maybe got this trade. If you remembered it. If not, you're probably short. Now, if you're short this market, and there's a lot of you out there that are, I've seen some of the numbers. There's a lot of you out there that are short. That's great. Don't worry about it. But listen, 80-80 to the top side, you have to be very, very careful right up there. That's probably an area where if this market breaks back above that 80-80 zone, you could definitely be in a little bit of trouble. So be watching, be diligent, be careful. Right there, there's your RBNZ plunge. That's the news plunge rotation, and now we're starting to fill back into this area. My guess is we probably top out right up in here before potentially challenging 80 yet again. Interesting market dynamic there with the Kiwi CAD. Definitely fun. It's a lot of fun when the market moves, guys. Okay, right here, 2022's low, 87.02. This is in the Kiwi Australian dollar, and this will be our last on the Kiwis. It's pretty important that we go over this, though, because this is the big mover and shaker before we get into the U.S. dollar, which is going to start moving probably big here in the next hour. But right here, Kiwi Australian dollar, you've got 2022's lows. This is something that I did the other day, a little bit of macro analysis, but I always am looking for these levels. We're always looking. We're like 7-Eleven, We're always open for business. We're always looking for levels. This low right here, you come in at about 87 even. So I'm thinking, okay, that's a long-term low. Remember, markets have memories. Markets have memories. When you see a yearly low a monthly low, a weekly low. Everybody can see it, guys. Everybody can see it. You're going to dig in right there. A lot of traders are going to dig in right above this zone. We've sort of already seen it. We had an 87.25 buy. What did you have right there? About an 87.36 and a nice bounce. I think that we're going to go down and test this area, and when we do, we'll be waiting right around 87. Pretty darn good areas, if you're, in fact, interested in trading the Kiwi, and I know a lot of you are. Okay, I got way behind on the live chat here. We're going to go ahead and jump around a little bit in this live stream because there's so much going on, and a big part of it is metals. So let me see. Global Vibe, gold, buy or sell. Let me see. Gerald, sell gold. Ooh, I don't know, Gerald. I can't tell you what to do because I'm not a financial advisor. I'm just a simple trader that's been doing this a long time. And one of the cardinal rules of trading is when you break above a key level and you're trending hard, don't sell it. I mean, you can do whatever you'd like. Just make sure that your risk is dialed in. Dave F19, good to see you. Lita, always a pleasure. You've got to remember that when, in fact, you are fading a trend, there are no rules on how high this market can go. We're going to look at gold right now, and I'm going to show you my rationale. I put something out on X earlier today, Shane V_trader. You can go ahead and check that out. And I told you basically 4,000 is going to be the bottom of this market for a while. And we've broken high. I'm going to show you the exact technicals right now. T. Marina, Shane, when absent from your trading journey, how, when, and where do you start to get back on track? It takes me about a week, T. So when I go out on vacation, like I was in Greece a few weeks back, over in Greece, a little bit R&R and just checking out the beautiful country. If you're from Greece, I mean, you have a beautiful country. I was blown away by just exactly how pretty the Aegean Sea was. I really was. It takes me a while. It takes me a day just to get back in the saddle after the weekend, T. So if I'm in there trading, if I want to get in there and trade, I'm not looking to make plays till Tuesday, at least not with any size. So what I would recommend is if you've been out on the shelf for a few weeks or a month or so, to get back into it, it's going to take you a few sessions. Start with small leverage, and then as you get the flow of that and as you start to see the movements and get into rhythm and feel good about it, then you start getting back to your normal leverage. Start slow. It takes me usually about a week, though. So like if I take a 2-week vacation or a week off, a week off's not too bad, but like a 2 or 3 week vacation, it's going to take me a good week to get back into it. And if in fact you have to shut down for a few months for whatever reason, maybe you lost a bunch of money, maybe you're worried, maybe you're pressure at work or something, I don't know, then it usually takes me a little bit of time, a few weeks. That's for sure. All right, let me see. Gold, let me see. Global Vibes calling gold at 3,900. All right, we're going to look at it right now. Okay, let me see. Gerald, DXY reached 99, guys, so carefully about a buy for all pairs. Yeah, I mean, the DXY, big-time rally. We're up about 0.5% for the third straight day. Not bad. So buy, just buy. We should already learn it, and it's going to be a buy until the 30th of October. Interesting, Hussein. Interesting. Can you load the gold chart, please? Yeah, Ivar, I'm going to load it right now. God, a lot of you guys want to trade gold. All right, guys, let's go ahead and do it. I put it off long enough. Okay, so this was relatively straightforward. This was our natural resistance right at 4,000. I'll just go ahead and pull up the daily chart. I felt really great about this trade. I mean, no kidding. I felt really great about it. You could see the red and the green. This was our trade. This was our entry point. Our sell right there was up around 39.89, and all we were looking for was about $20 to the downside. Let's go down to our 30-minute chart and see if we got paid. And right there was our entry, and we got paid off in about only 30 minutes. That's beautiful stuff, guys. That's exactly what I wanted to get done. If you're a trader, that's what I wanted to get done, right in front of that 4,000. Now, here's the kicker, all right? Now, here's the deal. This is compression. So let's go right down to, say, a 4-hour chart. You got some compression right in front of this 4,000 level. And I'm going to leave these graphics up for a minute, and then we're going to take them down. This compression right here, this is exactly what we wanted. Boom. Boom. What was our low down there? 39.41. That's a fantastic trade. Just an absolutely great trade right there. And we got a nice pullback right there down to 39.61. We easily made our $20 profit on there at 2,000 pips. That was a fantastic trade right there. Now we've blown up. Okay, now the compression's over. So we've compression, break. There's your break right there. Okay, so right up to 4,000. So let's get rid of all these graphics. This is the single biggest problem that young traders have. Inexperienced traders have is they look at their charts. I mean, this would actually be better. Let me just find a completely naked chart if I got one without any indicators. No, I don't. I got my indicators up on everything. Okay, here's our gold. Without any indicators, people are going to look at this chart and they're going to say, okay, well, it's an uptrend, it's an uptrend. I go, yeah, but why is price behaving the way that it's behaving, especially in the gold market? 4,000 was huge. No question about that. Right there. There's your compression, right around 38.75, or excuse me, 39.75, between 39.75 and 50. There was our compression. We finally broke high. Let's go right down to, say, a 5-minute chart and see exactly what happened at 4,000. It's very important that we understand. Look at this stuff right here. Spike high right up there, 39.99. Absolutely crashes in 20 minutes. The low's down there at 39.84, $15. Back up here, secondary test. We test 4,000 even right now. What happens right here? The sellers dig in again, drive you down $5, $39.95. And then what finally happens? Compression, there's your break. Once we break, we didn't break a little bit, we broke a lot of bits. So right now, 4,004 was just that 5-minute high. We broke $5 in a minute, and now we're just, 5 minutes, and now we're just absolutely cruising higher. There's no reason to try to reinvent the wheel here, guys. 4,000 is gone as a key level. So what do? How can we trade it now? 4,000's gone. We've already dug in and sold it. We sold it 6 ways to Sunday. We made some nice scalps, some nice counter trend scalps that were very, very good from 4,000. Now what are we looking to do? I want to buy pullbacks. I want to buy pullbacks any way that I possibly can. So right here, this would be my daily spike low, and I'm looking at my Fibonacci retracements right here. Of course it moved. But here it is. I mean, this is the game if you're trading right now. That's gold in a nutshell. The problem that we're going to have with Fibonacci's is when this thing finally tops out, we don't know how high we're going to be. I would love it if we go right up here, something like this. Maybe that's our high, maybe like 41 and a quarter, pull back, and then we're looking maybe to bid 409s or something like that. 4,000 is your new support zone. I would be very, very, very surprised if we trade beneath 4,000 in the near future. Could it happen? Yeah, it could happen. Anything can happen. So what I'm looking for right now is a topside extension, and then I'm looking to buy. I would love a daily retracement level. Is that realistic? No, not really. Not for right now. We're going to have to go down to a 4-hour. We're going to have to get more and more and more aggressive if we want to be in on this market. Now, I'm not going to sit here and tell you to buy at 4,054. I'm not going to do it because the trade location really is horrible. You could buy the top on a big-time pullback to 4,000. I want a nice measured move with a nice pullback, and then we'll look to grab this thing to the long. Now, are we going to get it today? Probably not. But here's a good looking 4-hour chart that sort of encompasses the breakup over 4,000, 4,013. Yeah, probably. I mean, any retracement that you get on this time frame is probably going to be pretty good. So that would be my game plan using Fibonacci's. I'm in complete buy mode up over 4,000. I'm looking for a nice retracement, a nice measured pullback, and then we're going to get in and we're going to bid aggressively. This is a breakaway trend. Now remember, there's no rules on how high this market can go. There's no rules. There is no rules. There's nobody out there thinking, okay, well, the top's going to be 4,000 or the top's going to be 4,100 or 4,250 or 45 or 47 or 5. That's all BS. And I really want to encourage everybody not to try to pick a top in this market. Now, you could be right. You may dig in and say, okay, I picked the top and I'm in. I picked the top and it's a huge winner and you're going to make thousands or hundreds of thousands of dollars on the trade, and that's great. If that's your goal, that's great. Go for it. Hammer down, guns up, go in there blazing. I don't have a problem with that. But understand that the probabilities are working against you significantly right now if you're trying to short the metals markets. I know it's a Captain Obvious thing where we know that, Shane, the market's going up. It is going up. It's not good enough just to buy right now, though. You've got to wait for a pullback. In my view, the pullback down to 4,000 is just it's a 5-star trade. It really is. It's an A-plus setup. The reason why A-plus setups are A-plus setups is because they don't come along very often. And the scalp in front of 4,000 was as strong of a trade setup as I've seen in a very long time. A very long time. We nailed it. Right now, pullbacks and buys from right around 4,000 are going to be the way that I approach this market, because if I'm going to put money into gold right now, I want to make my mistakes to the long side. Now, let's say you want to be really aggressive, and as far as is this a good idea to do it, maybe it is, maybe it isn't. Where's my 920 at? You go to that 920 EMA, you pull up your spot gold, and you say, okay, what's going on with spot gold? 4-hour chart. We've already got the buy. This is the buy signal came across the board The 19th of September, the bid was down from about 3,600. Okay, so it was a great trade. We already all know that. Is there any way that we could use this maybe to get in right now? And I would say go down to a 30-minute. Probably not. There was your crossover bid signal right there back on the 7th of October yesterday. That bid got you in on the breakout. We talked a little bit about it yesterday. Could you try to dial this thing down to like a 5-minute chart? You could. Right there would have been your bid. You could see right here, what did you have? Sell, loser, sell, loser, sell, loser, sell, loser. You gotta use your head, guys. You don't want to be selling gold right now. It's a bad idea. I can't tell you what to do, though. So if you do sell it, do it in a measured fashion. So right here, 5-minute gold chart, you're probably going to get this 9 to cross under the 20. Stop loss up here. Then you can look to grab that short. Something to think about there if you're interested. Let me see. We going short? We taking puts? No way, C-Money. Not a chance. I'm not taking any shorting, no puts, nothing on gold right now. I'm riding that thing to the top. Where's the top at? We were already seeing people talk about 5,000. I think we're going to 5,000. I had us going to 4,000 by the end of the year. We're there very, very, very ahead of schedule, very early. In my view, I would be looking to probably 5,000. And there's a hell of a vacuum up here. There's nobody up here that's really selling right now. There's a little bit of sales right here. But other than that, not much. Let me see who's not. Any prediction about the 1 p.m. news? I mean, it's an FOMC minutes. We're going to talk about that in a second. I'm going to break it down for you, but don't get too carried away with it. That's for sure. Let me see Shahil and Lucy Patel. Good to see you guys. Hi, Shane. Always good tuning into your videos. How's the trade idea of the U.S. oil looking so far? It was pretty good earlier. Not so great right now, but I'm going to go over that as well. Bro, buy or sell gold? Buy. Do you consider the rise in gold normal? Gerald, do you consider the rise in gold normal? Isn't $700 increase in 3 months scary? Absolutely. What is that, 30-something%? Not 30%, but 20-something. How much will gold dump when the central bank starts selling gold to pay off its debts? Here's the thing you have working against the gold dump narrative. I have no question in my mind we will see a big pullback in gold. The problem right now is the fundamentals. Okay, so when we're talking gold fundamentals, you've got cutting interest rates, a dovish Fed. Okay, that's going to spur inflation. That's going to force the price of gold up naturally. That's the way that works. As the value of the dollar goes down and as inflation spreads, the value of commodities goes up. Gold is definitely one of them. That's number one. Safe haven asset appeal number two. Why would we want safe havens right now? Got a lot of things going on. Russia, Ukraine, probably already baked into the gold cake. The situation in Venezuela, the U.S. actually hitting assets inside of Venezuela, that's sort of a new one. That's a new geopolitical uncertainty. How about the domestic uncertainty here in the United States? It's no secret that Trump looks like he's going to sign the Insurrection Act here relatively soon. All right. What that means is the federal government's going to they're going to claim jurisdiction in areas that are deemed to be out of control. That is a big time move. That's a big time move, and that you bet that spurs uncertainty, and you bet that makes gold look even better than it did. So that's key. Lastly, U.S. government shutdown. We don't know when that's going to end. This is an absolutely huge market driver for gold. Senate to vote on funding bills again. We don't expect them to pass. We have NFP for Friday. We don't expect it to pass, though. We don't think that the government's going to be open for business. So they're going to try to vote again today. They've missed 5 times. Right there, dual stopgap measures will be voted in the final 2 series of 3 votes to begin at 11:20 a.m. Eastern. So these votes probably are just about done. We don't expect them to do much of anything. So those 3 market drivers definitely have you dialed in and sort of in a position potentially to watch gold go higher and metals go higher. No question about it. All right, guys, we got a couple other things that we need to cover here before we get to our FOMC Minutes debate. That is the sort of the big news today. Trade update, government shutdown rolls on, U.S. oil. We had resistance in view. I really like this trade. I think this is a fantastic trade. Our trade was relatively simple. We were selling 62, 64s. Right now we're right around break even. Our high right there is about 62.92. We're risking about 100 pips to make 100 pips here. The pressure is definitely on this 38% level. We did have EIA crude oil inventories out earlier today, which spiked volatility and spiked volume. But you can see this is a 30-minute chart. You can see just how tight life's been right around our key level. So upon our initial, our initial entry right there, short right from that 64 area, we had a nice, beautiful pullback there to about 29. So that was good for right around 40 pips, something like that. And then the second rush, we got a nice, big, deep pullback right there on the U.S., not the U.S. Open, but the traditional NYMEX crude oil open. And your low down there was 62.12. So you got about, 52 pips, 53 pips profit. And then we sort of went back, and now we went back up and tested, and now we're right back at our key level. I still am bearish. I think that you probably could get this follow through to the downside. With this thing's already produced a max move of about 50 pips. You could stay the course. You could cut this thing off at break even if you want. It really doesn't make much of a difference. I like this trade because we do have the ability here to sort of take a position and watch this thing sort of fall with fall seasonality. So I'm still love it to the short side. It's already produced pretty well. This is really the nice aggressive downside move that we were looking for. We just didn't quite get the follow through. And that's essentially what trading's about. If you're going to stick in these and look for a lot of money, then the follow through, you're going to have to be aware of it. You're going to have to be aware that it's very difficult to call how far a market goes. Should we sell off $1 from this level? More than likely, yes. Will we? Well, we got to wait and see. Let me see. Bryn, hey, Shane, what's your opinion on gold and USD both being bullish, as historically they tend not to do that? Okay, great question, Bryn. The problem that you're going to have trying to establish correlations right now between gold and the U.S. dollar is the safe haven appeal. Now, believe it or not, when things get really bad globally in this world, there's a mode of thought that pushes investors to the U.S. dollar. It's sort of the ship with the least amount of rats. Now, we saw this during COVID immediately. A lot of folks just dove into the dollar because they figured that was going to be a region that was stable no matter what happened with the lockdowns, right? Well, you're starting to see the same type of thing here. A little bit of money going back into the USD because it was so undervalued. But will it last? I don't see it lasting. I think the gold rally is here to stay. I think this is a period. I believe it's a periodic bump. I'm in the DXY. I'm in the US dollar. I wouldn't marry the dollar right now. I would date the dollar. If you want to date the dollar for a few days or a few minutes or a few hours, that's fine. But I don't think I would marry it, not with the rate cuts coming and not with the turnover at the U.S. Federal Reserve that we're expecting. Okay, guys, let's go ahead and get on with the show here. We've got a lot to go over as far as what to expect out of our news release here in about 30 minutes. Let me see. Any prediction? Let me see. Thoughts on the Bitcoin versus gold memento. Bitcoin versus gold. Well, I mean, a lot of folks came out and said Bitcoin's going to be the big winner. I think that could be the case. I think that they're both going to walk in tandem. You're going to have a safe haven and a risk asset both moving up. Why? Because they're assets that are different than the United States dollar. Even though they're denominated in dollars or can be denominated in dollars, gold is very different than the dollar. Bitcoin is very different than the dollar. In many ways, those other two things are modes of exchange, modes of currency. And they're challenging the dollar, not necessarily going to complement the dollar. So I think that Bitcoin versus gold, I think Bitcoin will probably outperform gold, believe it or not. Think about it. As hot as gold's been, what's it rallied from over the last year? 2,500, 2,000? So it's what, doubled? What's Bitcoin rallied in the last year to 18 months, 2 years, 3 years? Rallied from 17,000. There's no reason any of it stops. There's no resistance up there. That's for sure. Thoughts on the yen? Yeah, I'll talk the yen here just a second. Yes, sir. That's an absolutely fantastic market that we do have to take a look at here. I definitely want to make sure that we touch our bases and understand exactly what's coming our way with regards to this latest news release. Excuse me. Starting to get very cold here in Dillon, Montana. Cold weather makes things dry. All right. Gold to tank soon? Not likely, APL. I'm in a buy at 39.87. Great trade, Globo. Great trade, Globo. Let me see Memento. I'm holding both, more so Bitcoin, so I very much appreciate the response here. Got a new subscriber. Fantastic, Memento. You're absolutely welcome. Hope that helped you out a little bit, Bren. Bren's been a trader a long time in the how to trade community, so if you guys are interested in heading on over and getting your education on, getting your learn on, go ahead on over to howtotrade.com. Check out our community and then also some of our learning our learning tools. All right, let's go ahead and go. Let's do it. Today, RBNZ interest rates. We already covered that. EI inventories. Very, very briefly, we're going to cover EI inventories. Crude oil inventories came in with a build, 3.715 million barrels. That was well above what was expected and above the previous release. What we need to understand with crude oil is we're in fall seasonality, and that's more fuel for the fire for me. I'm definitely looking at net shorts being crude oil. I'm not really interested in being long. And we got a pretty good location here, so we're just going to wait and see how that trade pans out. Remember, no trade's fallible. So even if you're holding shorts, if enough buyers come in, your goose is cooked. That's just the way that it is. I think it's a pretty good location, though. We're going to let it ride. NBA 30-year mortgage rates here in the United States. Mortgage rates are down again, so we are expecting dovish policy. But mortgage applications still continue to contract. Don't worry about that. That's definitely going into the season, going into the winter season here in the United States. You're going to see typically everywhere that it's cold, those mortgage applications drop because nobody wants to move in January. FOMC meeting minutes, that's what we're talking about. Now, a couple of things that we need to understand about the FOMC minutes. FOMC meeting minutes are written, they're in a written format, and they're going to take a little bit of time to digest. So don't expect the markets to go absolutely crazy in 30 minutes when this news breaks. Don't expect that. It won't happen like that. You'll start to see the volatility probably in 10 minutes or 15 minutes, maybe 20. So be patient with this release, okay? Now, after the FOMC minutes comes out, FOMC member Neil Kashkari speaks. Now, Kashkari's sort of like a rock star in the banking industry. He's the gentleman. He's got the shaved head. He's got the big eyes and the prominent eyebrows, and he talks really loud. He's sort of animated a little bit like I am, but what he likes to do is he loves to stir the pot. And Kashkari is probably going to come out and he's going to say cuts, 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 cuts. That will move the market. Be ready for Neil Kashkari when he speaks later today after the FOMC minutes drops. It's very important that you understand when bankers speak, it moves the markets. So have that on your radar. If you have to pull up maybe a little bit of a news event or a news service or something, don't be afraid to do that. Definitely interesting. So how does all this work? How does the Fed impact the Forex? Okay, when the Fed's dovish, it's going to be bearish for the USD. And what that means is it's going to send stocks and commodities, crypto, higher. Okay, that's when they're dovish. When they're hawkish, when they're talking about hiking interest rates, when they're talking about inflation being a big time concern, that's going to be bullish for the USD. The dollar's going to go up, stocks are going to come down, risk assets are going to come down, and commodities are going to sort of stay put. We expect a very, very dovish engagement from the Fed today. Let's go ahead and just take a look at a few news events here. I just sampled a few news services. Fed minutes to highlight rate cut path amid government shutdown concerns. This is what you need to know. Out of news outlets like this, okay, they're going to come out with headlines here, but it's going to take a little bit of time after that release is dropped. So the Fed minutes to highlight the rate cut path, that's what we want. We want any hints that tell us what the Fed is going to do. That's what's going to drive the markets. Now remember, anything that's dovish, rate cuts, maybe reducing the balance sheet, talking about giving more money to regional Fed installations, Fed bankers to work within their own regions. All those things, social programs, anything they talk about that involves putting more money into the system is going to be dovish for the U.S. dollar. That's going to send stocks up. That's going to send risk assets up. Remember that. Now, on the other hand, let's say that inflation's a major concern and we're really worried about inflation and we don't know, we're data dependent and we need to see more information before making further rate cuts. That is going to be viewed as extremely hawkish. And what will happen to stocks and commodities, they will take some bearish heat, especially stocks and risk assets. So right now, it's all about the cost of money. The markets have already pretty much priced in cheap money, meaning we want cheap money. We want lower interest rates and we want them soon. We want them now, okay? If we don't get the 2 more rate cuts that we're expecting this year, you're going to see a correction in equities. Will it be a big one? Probably not, but it could be significant in the short term. So be ready for that type of stuff when the Fed actually talks. Now, what is this really all about? All right, right here. Here's your FOMC Board of Governors of the Federal Reserve. Just go to federalreserve.gov for the actual minutes release a little bit later today. I'll be putting out a trade idea in howtotrade.com on our analytics thread, and it'll also be posted on my X and probably up on LinkedIn and a few other social media places. But the trade idea will break down the FOMC minutes. So be ready for that, but it's not going to come out until much later today because I want to see exactly what the markets do, and I want to see what's in this report. So about the FOMC, what is the FOMC? The FOMC determines monetary policy. They vote on rate cuts and rate hikes. They establish policy, and they're headed up by Jay Powell, and that all stems from the Federal Reserve Act of 1913. They gave the Fed the responsibility for setting monetary policy. Fascinating that the Fed made it through World War II and the crisis back in the 1970s without being disbanded. There's a movement here in the United States to get rid of the Fed. I don't know that it'll ever happen, but it may. You never know. We'll deal with that when it gets there. So what you've got here is you've got a bunch of governors on this board that vote. Okay, they all vote on rate up, rate down, rate sideways. That's what they do. So the committee members here, Jay Powell, John C. Williams, Michael Barr, Michelle Bowman, Susan Collins. Lisa Cook's the one that's interesting. Lisa Cook's currently up on mortgage fraud charges. Now, the Supreme Court has said that she couldn't be terminated just yet, pending oral arguments in January. That's huge, because if, in fact, Lisa Cook's found guilty of mortgage fraud, you're probably not going to be on the Fed's Board of Governors very long. That right there is going to open up a slot for a Trump administration appointee to step into that committee and potentially vote, well, for rate cuts. Right now, everybody wants to be a dove because everybody wants to be on the 2026 committee member list. And more importantly, Jay Powell, his term's up in May. I think he's gone before then. His term's up in 2026. A lot of these folks on this list are already auditioning for that next Fed position, for that next Fed chair position. Who's speaking later today? Neil Kashkari, Minneapolis Fed. You bet Neil wants a piece of that if he can get in there to be the Fed chair. Absolutely right. So a lot of the things that you're going to hear from these people are going to probably be dovish if, in fact, they want to keep their jobs and they want to be promoted in the system rolling in to 2026. I know it's politics. I know you probably don't want to hear it, but it's the truth. So what happened in the last time out? Okay, so here was your FOMC statement. In essence, this is what's going to happen. We're going to see the discussion behind this statement, and that's coming up here in about 24 minutes. But what I want to focus on right now is the vote. Now, about the FOMC minutes, we're always looking for a divide in that boardroom. We want to see a divide. We want to see some folks that want to leave it static. We want to see some folks that want to hike rates. Some folks want to cut rates. There isn't much of a divide in that room right now. Now, the Fed, those folks that I just showed you, they voted 11-1, all right, to cut interest rates by 25 basis points at the last meeting. That's pretty much unanimous. Now, the only outlier was Stephen I. Mirren, who preferred to lower the target range by a half a percentage cut. So who is Mirren? Mirren is what? Right up here. He's on the Board of Governors. He's on the Fed Board of Governors. So here's somebody who probably wants to be the next Fed chair. What does all this mean? We want to hear the dialogue around the half a point. Was it ever really considered? Were people actually thinking of cutting by a half? If it was, and there were some folks that agreed, maybe the next time out we'll cut interest rates by a half, or maybe if inflation tapers off, we'll cut by a half. That's going to be extremely dovish. In my opinion, that's what I'm going to be looking for in this Federal Reserve minutes. These FOMC minutes. I want to see if there's a real movement in that dialogue, in that environment, to move by a half a point, to move fast, not slow. That's what we want to see. So I'm interested. I think this is going to be a big one. And the last thing I'm going to show you here is the interest rate expectations, and then we're going to go ahead and look at some markets, dollar, yen. We've also got to look at silver. Silver is coming towards just a huge level, and I'm monitoring. I'm watching U.S. oil out of one eye and reading the news in the other. Fed watch right here. 21 days. I think I'll have it live for you. It depends on if I'm in or out of the office. But FOMC Live, come on in. We'll be watching that closely. But in any case, what do you got right here? These are our interest rate expectations for the coming meetings. So for October, what do we have? We're looking at a 92% chance, 92.5, that we're going to get another quarter-point rate cut. All right, what do we have in December? Where do we end the year at? 77.6% say we're going to cut again. So right now, there's a major, major, major chance. A lot of thought that's gone into these. These are derivatives markets, meaning these are the powers that be are betting on these rate cuts. They're betting heavily on 2 quarter-point rate cuts by the year end. Now, let's play devil's advocate, and let's go maybe to the end of Q1 2026 and see where our prime rate stands then. You can see it's much more unknown. 3.25%. 3 or 2.75, those seem to be the favorites. That's got about, 60% of the action. That's what they believe. So we're going into a dovish cycle. We're going into a rate cut cycle. That's going to be bullish for stocks. That's going to be bullish for risk assets. But what else is it going to be bullish for? Gold. It's going to be tough on the dollar, but it's going to be bullish for gold. So when you guys want to step up and you want to sell gold, if you're going to sell gold right now, do it on short time frames. Don't just take a position and say, I'm going to pick the top. Those are the famous last words, guys. Pullback buys. We might actually get a shot at a pullback buy here today. 40.13's got to be on your radar. Okay, let's get on over the dollar yen. Yes, sir, asked about the dollar yen. This is a daily chart. This is sort of the void. We saw a major bullish open here, dollar yen action. And this area right in here, we were sort of thinking if we could get a pullback in there, we'd want to go long. We are off to the races right now. A lot of concerns coming out of Japan, change of leadership, first female prime minister there in Japan. And what we're seeing is just a little bit of uncertainty creep into the yen. We've known for a long time that the Bank of Japan wanted to get back to a negative deposit rate and that rate cuts were probably the way forward. Well, this chart's sort of showing you exactly what traders think of the yen. Right now they're getting away from it, and I don't blame them. I really don't. Just for right this minute, I would not even hesitate to buy the yen. This is a breakout. This is a bullish breakout on the daily chart. We're above that upper Bollinger Band, a pullback back to 150.53. I mean, I'm in. I would feel very good about that trade. Now, what else could we really do on a 4-hour chart? It'd be really the same type of dynamic. You could work right here from this double bottom if you want. There isn't any need to. Just take the weekly range. Like say going into the FOMC minutes. Right now you're trading 52.79. Maybe you get that pullback down here, 51.48, something like that. That could be very good. 51.55s, 150.155s. That could be very good. So definitely you don't want to ignore that. Let me see for gold. Let me see appeal. I'd say if the 15-minute closes bullish, fair value gap to IFVG, we bearish. Yeah, I would be very, very careful on any bearish plays on gold. Let me see Gilio Fink, buy now. Now you don't want to buy this now. You want to wait for this yen to pull back just a little bit. As far as gold goes, if you wanted to buy right now, what could you really do? 5-minute chart, nice big volatility. About the only thing that you could hang your hat on would be maybe 40.50, but even that hasn't really worked. You can see the compression right there at 40.50. Pretty much every level's got sellers in front of it, but once you break, pull back. Now this area is saturated. If you wanted to buy it, you probably could. Could you get away with it? I mean, if you want to send them long, you can send them long. Paper trading, remember, all this is just sort of this is all demo dollars, so don't get too carried away with the size that I use. But right here, let's say you wanted to buy. Okay, let's go ahead and buy the market. And this is something that I don't recommend, but let's go ahead and do it. I could show you at least how to get yourself out of trouble doing it this way. Okay, let's say you just dove in and bought gold. Let's say you bought. Okay, where do you have to get out at? Now, I just made a decision based on a 5-minute chart. My decision is to buy and hope for that rally over 50. And right now, we're hoping. I have no idea where this market's going, especially ahead of the FOMC minutes. How would I build a trade that at least will keep me not from going broke? Stop loss, put it beneath the swing low, somewhere down there beneath the 5-minute swing low. That puts us at 40.42. Take profit, probably the top of market structure, which would be up there at 40.59. So what does that trade look like? Risking 750 to win 940. Do we think that that's even remotely possible? With the FOMC minutes, it is possible. But I want everybody out here to realize what I just did there. I just bought the market near the top for the day. I put in an arbitrary stop loss beneath market structure. And I put in a profit target at the top of market structure. Everybody can see this top and everybody can see this swing low. Is there any reason why I believe that the market's going to rally up other than we're just bullish? No. The FOMC minutes report could shake this thing up and we could either win or lose. This is gambling. In my opinion, trading in this fashion is not good enough. I've done it in the past. I've said, I just want to get long. I don't want to miss out. FOMO. If you trade like that, you're going to get banged up. You're going to get banged up. And that's not good. That's not good. It's not good enough. I'm not really talking to you smart money concept traders. There's a lot of you out there. I actually respect what you talk about with market structure and liquidity sweeps and fair value gaps and all that stuff. I get it. It's just different terms for things I was taught different words for because I've been around a little bit. But if you think that there's any importance to that swing low right there on a 5-minute chart, well, it's a liquidity sweep and the liquidity left the market. No, it didn't. It's a 5-minute chart. You want to talk about liquidity? Go back and look at what we talked about at 4,000. That's liquidity. I would even believe that, okay, here's some sweeps. Here's some institutions bailing out before they get to 40-50 profit taking. All right, I can buy that. But what we did right there, buying just to buy, that's why 90% of the people end up not trading after a year of being in the game, 2 years of being in the game. Because this right here has a fantastic opportunity of stopping you out before it rallies to the promised land. Don't do that. Don't do that. You don't want to do that stuff. What am I doing right now? I'm hoping it goes up. I'm hoping. Hopes for children and losers. Don't hope. Not when it comes to trading anyways. Let me see. I don't know, man. That one dude who spent $47,000 on 2 weeks call on AMD before OpenAI. Yeah. I'll tell you what, AMD exploded. Let's go ahead and check on AMD. That's absolutely a great idea. We checked on AMD earlier this week. I sort of outlined the gap, and this was what I put out. I put this one out on X, Shane V_trader. You can see my analytics, AMD. It was very simple. Right there was your spike low on that Friday. Boom. What happens Monday? They buy a 10% share of OpenAI. There's the pullback. The pullback right into this gap, and this is a true gap. This gap right here, this gap's never been traded. Well, that's not true. It's been traded back in July of 2024, but that's a gap. That's one that we wanted to attack. We knew there was a pullback there before what? Before we've exploded higher. And, I mean, right there, 38% right in that gap formation. I mean, that's a banger. It's a banger. Go ahead, go back to X. Check out X. I wanted a deeper retracement. I thought 186 was probably going to be an investment play, something you could buy and really get in there. What was our next port of call for this thing? It's 250. If you're interested in AMD stock, it's 250. No question. Have we ever traded 250 before? Nope. What was the previous all-time high coming into this mess? 213, 210. You'll notice that's right where we went. Right up around that all-time high, somewhere right in there. It's good stuff, guys. AMD's a big one. Let me see. Absent 10. Will a stop loss not take you out if you're buying and then sells and the news sells? Yeah, your stop loss is going to get hit. Let's see how our gold trade's doing. All right, now we're making money. Never mind. It was a great trade. It was the best trade of all time. It's not good enough. You don't want to be short right now, though. You don't want to do that. I don't do hoping. Yes, sir. I don't do hoping. There's no hoping at a key level. No, it's obvious. You have prima facie evidence at a key level. Okay, everybody, one more market that we want to cover here, unless we have any others. Silver. Now, I've said this a number of times because I know that somebody out there that's probably been watching me trade for a long time and understands my views on key levels. Key levels are money in the bank, typically. The problem with key levels is you don't get enough of them. That's the truth. I can make key level videos and we could sit around and slap each other on the back and say, man, that 4,000 sell in gold was beautiful for 2,000 pips fast. Yeah, it was. Can you make a living doing that? As a retail trader, probably not, because there's not enough trades. There's a lot of them, but you have to have a market that's trending. You have to have a key level that's coming into play, and you have to have a public that's participating in the market. People have to be trading it or else it's not going to work. Everybody right now is trading silver. Most people are buying silver. There's a lot of reasons for that. I won't bore you with the details, but it boils down to AI. It boils down to using silver as a conductor. It also boils down to governments getting involved. All of a sudden, China has sort of tipped its hand on what it's doing in the silver market. That's driven silver bullion, up huge. We're at a key level right now, which is 50. All-time highs at 49.81. Now, normally, I would step up to the plate and I'd say sell, 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 sell right up here, 49.90s, 49.95s, and then get that immediate push off or pullback for a nice scalp. Normally, I would say that. 9 times out of 10, I would say that. I'm not saying it this time. Why? Because the all-time high is right there at 49.81. Now, listen, this is Wanda data, so your broker may have a different all-time high. The bottom line is this. Understand that the all-time high for silver is right around 50. There are shorts dug in there. There are shorts dug in now. There are going to be stop losses that are run up over this all-time high. Almost guarantee it. 50. 50 should attract some sellers. Should also attract some buyers. We're going to get two-way action in this area. The problem that I have is when that all-time high is triggered at 49.81, I could see a scenario where we get a big-time break above 50. Now, I'm not sure of it, and I'm not sure enough to put my big money down on it. I'm not interested in that. I don't want to sit around and hope 50 acts as a launch point to the next level because it should bring two-way action. Buyers and sellers should collide at 50. But if they don't, we got a problem, especially if we're short or if we're long. We're going to hold off on this one. We're going to wait. We're going to wait for an opportunity potentially to buy a pullback or play a breakout after we see this market trade right around 50. Now, in a perfect world, we trade 49.99s and we have a bunch of daily ranges until we get a big bullish pennant here. And then that just tells us, that gives us all we need to know. And then we take the long and we take the shot to the top side of 50. Be careful up there. Be careful with the silver market. It's bullish. I have no problems buying it, but take a look at what's happened here. Retail longs have gotten slaughtered trading silver. It's just the truth. Down in here, once we broke above 40, we knew we were going high. No question about it. We called it at the time. Go look at some of the old live streams over at How to Trade. It's cataloged. They're all there for you. This pullback right here destroyed people. 2% came out, knocked a lot of retail longs out. What happened right up here? Compression, break. What happened here? Knocked retail longs out. Knocked retail longs out before it bounced. Knocked retail longs out, and then the breakout. Listen, the silver market was hemorrhaging yesterday. You're off about 1.5%. People were unloading. They were unwinding their positions going, well, I guess this is the top. And look what happens today. It's an explosion to the top side. Be very, 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 very careful trading silver. We're going to commit to this market once we break above 50. We were already committed to it above 40, but 50, this is the kind of business we want to be involved in. We want to see some compression, and then we play a break. That's when that's when it's all worthwhile, guys. That's when a plan lines up and you feel pretty good about it. All right. Okay, guys, that's going to be about a wrap for me. FOMC minutes, 10 minutes. 10 minutes out. They're going to drop. There's the old saying, fools rush in. Fools rush in. I guess that's the name of the movie. Don't rush into any positions right after the FOMC. Let the market digest this thing because the FOMC minutes takes a while to disseminate and trickle through the market. It is a written piece of information. Anytime people have to read and interpret, there's going to be a bunch of different perspectives on it. Be very, very careful with what you do there. All right, guys, I'm going to go ahead and sign off here for right now. Remember, be ready for those keys that I just told you about in the FOMC minutes report. You're going to want to be, I would say, cautious. I have a hunch that it's going to be a very, very dovish FOMC minutes. There's going to be a lot of people in that room that are calling for aggressive rate cuts because they want to be positioned. I guess they just want to be promoted in that industry, and the promotions are going to go to the doves probably starting next year. All right, everybody, I'm going to go ahead and sign off for today. Thank you for joining me. Fantastic session. You guys have a great day. If you have any questions at all, be sure to head on over to howtotrade.com. Send me a private message. And, of course, for all your trading needs, you're going to want to head on over to Switch Markets. Take a look at those accounts. A lot of different types of accounts. There's a lot of different types of bonuses. Huge leverage is available depending on your municipality. And then also all of the markets. If you want to trade AMD stock, you can trade CFDs based on AMD or pretty much everything else. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.